Hi everyone, welcome to today's video. So when you are starting out in the stock market, you will be doled out a lot of confusing advice. Someday you will read that Mr. Warren Buffett said that we are in a bull run, and then you will imagine that we are in a bull run and you will start investing money. Then Peter Lynch will say the next day that no, we are not in a bull run. The debt market is going to go up and the stock market is going to tank. Similarly, there are contrary positions that even ace investors like Mr. Mohinish Pabrai, Warren Buffett, Peter Lynch, all of them take, right? So if you hear their opinions, you will end up getting confused. Don't get me wrong. It's great to learn from them. But sometimes as a beginner in the stock market, we end up absorbing so many different things that it confuses us. And we end up making massive number of mistakes. So on this video, I'm going to cover 5 specific mistakes that beginners in the stock market usually make. Even if you are an intermediate level player in the stock market, do listen to this video, do make notes. It's going to be very important. Humble request, if you love the content, press the like button. That makes me super happy, helps with the YouTube algorithm, and it encourages me to continue to make these type of videos. So the first key mistake that you're going to make in the stock market is that you are going to make investments based on news. So please do not do this. Please understand that many a times the news is manipulated. I will show you with an example also. But please understand that many a times the media outlets are owned by major conglomerates. Now I will not name it here, but would encourage all of you to post some names in the comment section that which major media outlets are owned by major conglomerates in India, right? Would love to read that. So that's one, and therefore many a times you will see that hey, if something is going wrong with a major business house in India, it will not get covered in any of the media houses. Or if a major business in India wants to give out certain kind of news, then they can easily push it because they themselves own the media. So these type of things happen all the time. That's one. Second, sometimes financial writers write things in a very incorrect way. So let me show you an example without any further ado. Now this is a recent news that was published in Financial Express in March of 2021, right? So not too long ago, and it categorically said that RBI finds Rupees 519 crore provisioning divergence by Central Bank of India in financial year 20. By reading this headline, you will start panicking that you know what, something bad is happening with the Central Bank of India and RBI is doing some things there and this is just really bad and I should get out of this stock. And that's precisely what happened, that many people sold their stock after this news. But this is how reporting is done, and this is not just a one-off example. If you actually go to the core of the entire thing, you will read a lot of things, right? For example, here is this paragraph that is important. The bank had declared more than required net NPA during financial year 2020. While the lender had reported the net NPA worth 11,534.46 in financial year 20, the RBI assessment showed net NPA at rupees 11,104.46 crore. So if you understand this paragraph well, it simply says that the Central Bank of India reported a higher NPA than required, and that is where the divergence was. That's A. Second, look at the amount we are talking about, 11,104 crores, right? And how much is the divergence? Even if you assume it to be some bad news, it's 519 crores. So in percentage terms, how much is it? It's not much. But the way headlines are given out, it really can confuse you and it can make your life really difficult. So always double check multiple sources for news, understand and interpret the news correctly. Don't just simply go by headlines and don't trade on stocks, either buy or sell on stocks just given the news, right? That's one of the key mistakes that you will make. That's one of the key mistakes even I made when I started my stock market journey. So please understand it. So what are some good sources to consume news? Now, if you go on ticker tape, you will clearly see that there are a lot of new aggregated news that are given out by multiple media houses, right? Now, I'm not saying that go and trust like Economic Times or Business Today, but if you go on ticker tape and type ITC and go on the news section, you will see a bunch of recent news that has been given out. So quickly read all this latest news, understand it, aggregate it, and then act upon it. Don't just simply read some random headline in the newspaper and start trading on it. That's one of the key mistakes that you will make. Now, the second key mistake that you will make in the stock market is that you will not invest in value stocks. Now, value investing is a simple philosophy. I'll explain it in a very easy to understand way. Now, essentially, whenever you are buying any business, it can be a large cap business, it can be a mid cap business, it can be a penny stock, it can be a small cap, whatever, right? Whenever you are buying any stock, be it ITC, HUL, Tata Motors, Tata Chemicals, whatever business you are buying, what are you doing? You are buying a business. right? It can be large cap, small cap, whatever cap, it doesn't matter, right? You are investing your money in a business. Value investing simply says that you should buy a business that has high prospects of growth in the future. That is the same philosophy that every ACE investor uses in very, very simple terms. Whenever they are making an investment in any business, be it a startup, be it a listed company, be it an unlisted company, they are going to understand the growth potential of this particular company. I have taught some tips and tricks around value investing. I have linked the video here. Please take a look. Important point for you to understand is that whenever you are going and investing your money in any stock, any stock, please understand that you are investing in a business that is likely to grow, right? So understand the future prospects of it. Future simply means there is certain horizon that you are okay holding that stock for. It could be 1 year, it could be 6 months, it could be 5 years. So define that horizon, understand whether this business will grow in that horizon or not, and then make a call, right? Many a times what we do is that we just say and we expect people to tell us multi-baggers. There is no such thing as multi-baggers. There are good businesses that are likely to grow in the market, and then there are bad businesses that will not grow. Let me give you an example here. We are sitting in August of 2021. Mr. Rakesh Jhunjhunwala has invested a lot of money in an airlines company called as Akshat Air. Now, it would look madness to us that there is coronavirus problem going on right now. Flights are not taking off. Bunch of bad things happening in the travel economy. We don't know when the coronavirus problem will go away. And there is Mr. Rakesh Jhunjhunwala who has bet a lot of money on Akshat Air. Why has he done it? Now you must, as a beginner, try to decipher that rationale and logic. Why has he done it? So do comment below that why is it that Mr. Rakesh Jhunjhunwala has invested in Akshat Air? What is your thought process? And just to streamline our conversations, because many a time I ask you a question, ask you to comment below, and then I'm not able to respond to it. So I'm going to update my answer in the description box and the pinned comments both, right? So after 3 to 4 hours of this video going live, I will do that. So please check that and tally your understanding, because if you don't understand these basic things, that why is a stock likely to grow or why is an industry likely to grow, then honestly you should not be playing the stock market game. You should rather go and invest in mutual funds. You should rather go and invest via small cases. Those are the type of bets you should make. So in summary, please understand the concept of value investing, how ACE investors like Mr. Rakesh Jhunjhunwala are currently undertaking that concept, and they have been doing it for years. So do conduct your own research as to why Mr. Rakesh Jhunjhunwala sees a value investing opportunity in Akshat Air, and send me your comments. I would love to read it. It will help me understand that you are actually understanding and following the content on this channel. Now the third mistake that you will make in the stock market is that you are going to start investing very late. Now, there are two categories of people here, right? One are students who are in like class 8th, 9th, and they will say that, Akshat, am I late? Because I read Mr. Warren Buffett. He said that he should have invested when he was like 6 years old. No, right? So you're not late. It's okay. Please take your time to first and foremost earn, because if you're not earning, then what will you invest? If you're just earning 100 rupees, then maybe it will become like 300 rupees if you're an ACE investor. But what good does that do? So first is that please improve your earning potential. That's step one in terms of entering the stock market. It is fine. If you have started investing in 30, 35, 40, it's not a race, right? You just need to understand how to manage your own money. We are not trying to become Mr. Warren Buffett. We are just trying to invest our own money really, really well. So that's the goal with which I'm running this YouTube channel, that you will pick certain tips and strategies and incorporate it in your investing style, and that will hopefully make you richer, right? Not the richest person in the world. So, okay. So just to summarize, please do not worry about if you're starting late. Late does not mean that, you're already 30 and you're late. No, it's fine, right? Try to start as soon as you can. That's point one. Point two, let's look at the people on the other end of the extreme. Now, there are people who are already earning well. Their money just keeps sitting in their bank account and they are not investing, and they don't want to learn how to invest, and they are not even going out and making a bet in terms of investing in anything, be it stocks, bonds, mutual funds, anything. So that is wrong again, right? So don't be on the either of these extremes. Don't be super excited in terms of starting your stock market journey when you're 12 years old, and do not be on the other end of the extreme when you're 30, 35, earning really well and the money is just sitting in your bank account. Now, why am I saying this? So let me show this via a SIP calculator. So let's assume that you're 25. Let's assume a very reasonable age. So let's assume that you're able to save 10,000 rupees, right? So I'll input 10,000 rupees. Now, if you're investing in FD, how much return are you going to make? You are roughly going to make after tax return of 4.5-5%. So let's assume 4.5%. Now, if you're 25, then you're at least going to work for how many years? 40 years, 35, 40 years. So let's put the period as 30 years. In 30 years, what is the total value of your asset? It's 76 lakhs, right? 76 lakhs. Now, let us change the expected return. Now, here we were investing in a FD. FD is very safe. Now, let's change it. Let's just say that your money comes, you get a salary, it hits your bank account and it keeps sitting in your bank account. It's called as saving rate. Now, what is the savings account rate? It's 2 to 3%. So, let's assume 2%. Now, the total value becomes 49 lakhs. Okay, only 49 lakhs from 79 lakhs. Now, let's say that you are able to invest in an S&P 500 or in India, if you are investing in Nifty 50 passive mutual fund. Now, what is passive mutual fund? We will talk separately, but it's relatively a stable way of index investing. So, here in the past, on an average, you have made around 12% returns. Here, your portfolio grows to 3.52 crores, right? 3.52 crores. So, if you are investing in an FD, it was 75, 80 lakhs. If you are investing in passive mutual funds where you do not require to do anything fancy, you are making 3.52 crores. And that is the difference between learning how to invest vis-a-vis not investing. I have not even gotten into how you can make more money via stocks. So I hope the point is clear that number one, please do not be on the extreme ends, right? Do not be super fascinated to start when you're 12 years old. If you're doing it, amazing. Kudos to you. Wonderful. Read, educate. Amazing, right? But focus on improving your earning potential first. If you are on the other side of the spectrum, that you're earning really well, and if your money just keeps sitting in your bank account, then you are losing out free money. You are just literally losing out free money, and it is just not worth it. So please learn a little bit about investing. It is not a race. It is just a way to improve your life. And please, please, please do not commit this mistake. Now, the fourth point is something called as misaligned expectation. Now, this is something that I want to invest little bit of time explaining because this is a very important concept that many of you might be hearing for the first time. On several of my videos, I have said things like that, hey, I am able to grow my portfolio between 15 to 20% each year. Approximately, that's my annualized return. Now, a lot of YouTubers, a lot of commenters, spammers, they say, no, Akshat, you're mad, right? This is just madness. Even Mr. Warren Buffett, he cannot grow his portfolio at above 12%. How are you gaining 15-20%? It is just madness. So let me give you an answer. And this is not a trick. It's simple. Number one, I live in India. I invest mostly in Indian stocks. India is an inflation-oriented market. So in India, if the inflation is 5%, can you guess what the inflation in the US is? It's very stable, right? So in India, it's 5 to 6%. In US, it will be 1 to 2%. So anyways, there is like a 4% difference there. Okay, that's one. Second point is that Mr. Warren Buffett's portfolio is this big. Can you guess the size of Akshat's portfolio? It must be this, okay, just a dot. So the point is that I have a very small portfolio. Mr. Warren Buffett has a big portfolio. Now let's imagine that Mr. Warren Buffett wants to sell his shares of Coca-Cola. How much of his money is tied in Coca-Cola stocks? It must be tens and thousands of crores. Let's imagine that he has invested 10,000 crores in Coca-Cola. And tomorrow he sees an opportunity that I need to get out of Coca-Cola stock, so I should sell it. Do you think that he can just sit on his computer, press the sell button and all his stocks are gone? No. Because if he starts selling 10,000 crore worth of Coca-Cola stocks, the Coca-Cola stock will fall like this. Okay. This is very important for you to understand and follow along. Big investors, big sharks are like wrestler Khali, right? So he's very big in shape and size and he cannot move very swiftly. But if you're a very small rabbit like me, right, then you can move in a very agile fashion, right? You can move and hop around very, very quickly. So that is the difference between retail investor and a big shark. If I am owning like Coca-Cola stock or if I am owning Titan stock, how much money would I be investing? At max, I'll invest like 40-50 lakhs on one stock. That's it, right? But if Warren Buffett or Mr. Rakesh Jhunjhunwala, for example, he has 8,000 crore of stock of Titan right now, 8,000 crores, right? Now, if he wants to get out of Titan, can he do it easily? He can't, right? So this is the difference why that people like you and me can actually make 15-20% return because we can swap around. This is called as swing trading. And please do not believe in arguments like that, hey, retail investors can't make 15-20% and retail investors are really bad. Yes, they are bad because they are not willing to learn. So as long as you are investing your time learning, you will make decent amount of returns. So have the belief. Only when you have the belief, you will be able to make return. Fifth and final mistake that you will make in the stock market is that you will not understand the assets that you are buying. Now, I am a big believer in cryptocurrencies, and I openly advocate that if you're young, if you're investing your portfolio in an aggressive manner, then you should have a little bit of exposure to cryptocurrency. Now, when I go and speak with people that, hey, what do you know about Bitcoin? Where is it deriving value? What do you know about Ethereum? What do you know about NFTs? They will not understand anything. They will just simply say that, Akshat, because Elon Musk tweeted something, therefore we bought it. Now he's probably getting out of cryptocurrencies, therefore we are selling it. If you don't understand this basic stuff, then it's a problem. Now let me prove it to you that how it hurts you. For example, I showed a video this Sunday that I invested 1 lakh rupees on this Vault platform, right? Right now, it is paying me an interest. Now you will be very surprised to learn and tell me in the comment box that did you know that on cryptos, you can actually do a fixed deposit. You can actually do a fixed deposit and earn money. So this is the money that I have made in the last 2 days. I'm shooting this video on Tuesday. So in the 2 days, I have made an interest of 18.46%. My portfolio has gone up by 3.6%, right? So this is the return that I'm making. So the idea is not about return, but when you're getting into assets like crypto, and if you don't even understand that, hey, I can actually do a fixed deposit on crypto, then probably you should not even be buying such an asset. Right? So please educate yourself about certain assets that you are buying. For example, if you are investing in ITC, please understand a little bit about ITC. Do a little bit of YouTube research. Watch my video on ITC if you are interested in investing in ITC. Understand that why certain people feel that ITC will grow versus not. Will it stay stagnant? Will it come down? At least have your opinions around it. Similarly, if you are investing your money in banking stocks, then you must have an understanding as to why the banking industry will grow in India. And this does not require a lot of knowledge in finance. All you simply need to do is that follow the industry, follow a bit of news, do a little bit of digging. If you know how to read balance sheet, etc., of course, it's advantageous and you should spend your time learning about it. But at least start developing a bit of understanding before you jump into investing in any asset, be it cryptocurrencies, be it stocks, be it bonds, whatever. So this is my humble request that please do not make these 5 mistakes. What were the 5 mistakes? Number 1, trading on news and not absorbing news correctly. Number 2, not understanding what value investing is and having no assessment of how to analyze a stock. Number 3, starting very late or assuming that you're starting very late. So you don't need to start too early and also you do not need to start too late, right? Number 4, believing in the narrative that you can never make more than 6% because that is what the FD rate is and you keep putting all your money in FDs. So that is again wrong. And 5th and finally, you must understand the asset in which you are investing. At least know the basics. I'm not saying that go do a PhD on that asset, but at least understand the basics of it. So I hope you found this video to be useful and informative. Please give it a thumbs up. That would mean a lot. Do send in your comments on the questions that I have asked. That again will help me understand that you're learning something from this channel, and I will update my answer in the comment section and the description box. I'll see you tomorrow.